Hello everyone and welcome back to our YouTube channel. Today I'm going to show you one of the main tools that I use to gain sniper entries. When I'm trading with our members, I cover this all of the time. Nearly every single day I use it on all different time frames and it gains you sniper entries on all different time frames. Not only that, it also just helps you understand what the market's done and where the market's going to go, which I'm going to show you in this video. So even if you don't get the sniper entry at the top or the bottom of where I'm going to show you, by understanding the top or the bottom has already been taken out, you know where the market's going to go next, and you can then delve deeper on lower time frames and use this simple tool to gain entries. Once I show the tool, you're going to think, no, it's just that tool. It can't be as simple as that to use for sniper entries, and it really can be. In our previous videos, since we've come back on YouTube, I've spoken about the dollar index and how we called the top of the dollar index in December actually, and we called it to be at the top in January. And I'm going to show you how we done that. And we've done that publicly, and we actually posted that on our IG page and showed you where to sell the US dollar and where to buy EURUSD, GBPUSD and Aussie dollar, so that all of those pairs would go to the upside, and of course the dollar index would crash. I also on previous videos spoke about oil being at a certain place in the market and a few other pairs, and again alluded to an area in the market which I'm going to show you in this video, the tool and how to use it, and why we knew that the dollar was at the high and that we knew those US dollar pairs like EURUSD, GBPUSD, Aussie dollar, and any other US dollar pair like that were at the lows, and that they were going to have a big push up to the upside, with EURUSD, for example, seeing a 1,000 pip move along with GBPUSD and Aussie dollar. So we're going to delve into the charts now and show you how simple trading can be. And just on simple, in our previous video as well, we talk about strategy and how strategies can be so simple, but it's often the psychology and yourself that is the problem. Trading can be so simple. Just simplify it. Just understand a certain set of rules and tools, understand the psychology around them, and then you'll be able to be a successful trader. It doesn't have to be hard. Just figure out your own psychology, sort that out, use the simple tools, understand them, and as this video will show you, there's an easy way to gain very good sniper entries. So let's jump into the charts.
So guys, here is the dollar index on the monthly time frame. Yes, the monthly. And I'm going to show you on this video that the simple tool that we use can be used on any time frame. Note that anything that you do with technical analysis, the higher the time frame is always going to be stronger. So if you're dealing with a monthly trend line compared to a 1 hour trend line, the monthly is going to be much stronger. The 1 hour is more susceptible to break it. Monthly support and resistance is going to be stronger than a 1 hour support and resistance. And the same thing goes for what I'm going to teach you here. Now, this may look very basic, but when you understand the psychology and to do the opposite of what the 95% of retail traders do, you'll see how amazing something so simple can be. Going back to our previous videos and our psychology introduction, we've spoken about strategies and sticking to a strategy and how anything can be used if you know how to use the psychology around it. Here, on the monthly time frame here, in December and January, before January had the turn, we called the top on the dollar index in December and said that we're going to see a push up in January because of this candle closing strong. We said we're going to see a push up in January, and that would mark the top of the dollar index. We were able to call that in December by understanding the tool I'm going to show you. Then at that time, if you remember, the dollar index was extremely bullish, as you can see, but so was all retail traders. Social media, etc. All I could see was that the dollar was going to continue pushing higher. Trump was in office. The inauguration was around in January. Everything was pro-dollar, pro-Trump, pro-US, and the dollar was obviously had this big push up, but it was priced in. But regardless of it being priced in, the simple technical tool showed us that price was going to take out here. And not only did we call to short it here, and if you look to our IG post where we gave out the exact region to short the dollar, it was the top of this candle. And we expected it and called to our members that price would come all the way down to here. Not just anywhere in the middle of this, but this whole move down, we expected it to come to the downside. So we were able to call that by using one simple tool. And that tool, believe it or not, is a range tool. And what the dollar index was in was a monthly range. I'm showing you this on the monthly first. I will show you lower time frame examples, but we don't get price taken out a monthly range high or low every day. We're dealing with the monthly time frame, so it very rarely happens. But if you're always watching all time frames, you can see when price gets to those areas. And with a monthly time frame, obviously the move is going to be much, much bigger and incredibly big when you start dropping down to the weekly and daily and 4-hour time frame. So to keep it really simple for the moment, here, price had made a low down here, and the range tool should become your best friend. When price makes a definitive high or a definitive low, take out the range tool, highlight the low, for example, down here, and highlight the high, and then extend that into the future. Of course, the top of a range is resistance, the bottom of a range is support. Now, how do we know that price is going to reverse? Because price almost all the time, nothing's 100%, but a high majority of the time will take out a high or low range and then reverse and go in the opposite direction. However, what retail traders do is they see a break of a range and they will buy. Imagine this is a 1-hour time frame. 1 hour break up higher, they'll buy, put the stop loss below the range, which is what most retail traders are taught. Extremely bad risk rewards. They might go into a few pips profit, a little bit of profit, but then price reverses and then takes them out. Again, imagine this is a 1-hour time frame for the moment, and this is the bottom of the 1-hour range. It will take them out, and at that point of being taken out is usually where the market then flips, reverses, and makes a move back up to the upside and goes into profit where they could have been in profit. Just because it happens on the 1-hour time frame and 4-hour time frame, it doesn't mean it can't happen on the weekly and monthly. Now, in this case, I'm showing you the monthly because it's happened recently. I will show you lower time frames shortly. But here, when price came up to this high, we had the high of the range over here. Price pushed up, hit that. We explained to our members, do not sell this. The price is coming back up higher. This was a false move just to bring in the shorters. Drop down to the weekly time frame. You can see typical retail mentality. Technicals is as price came up here, 1, 2, 3, an evening star formation, bearish engulfing candle down, bringing in lots of shorters. The more bearish that candle is, the more shorters that price brings in or the market brings in, the more retail traders shorts with liquidity above. So explain to our members, wait for the next drive. Price pushed up here, extremely bullish candle. So of course that bullish candle high is going to get liquidated. So we knew January was going to be the top. Then in January, we dropped down to the weekly time frame or even the daily time frame. I'll stick on the weekly for the moment. But I'll go down to the daily. In January, the post we gave out on our Instagram page where we said to short the US dollar was exactly here. And at the time, the reason we studied the dollar index is because when you study what the dollar index is doing and you know what the dollar is doing, the US dollar, you know what the majority of the market is doing. A lot of the major pairs are obviously US dollar based. So if you're going to short and understand that the market's going to sell off on the dollar index, as we explained in our IG post, you could buy EURUSD, GBPUSD, and Aussie dollar US dollar. All three is what we said to buy in that video. And from that moment, we have seen that price has not stopped pushing back down to the downside and going for the move back down to the bottom of the range. Go back to the weekly. Understanding this range gives you the confidence to hold this and see that bigger move to the downside. Not only just to take the trade and hold for some of the move, but understanding the target. Now, what we explained to our members when we were saying that price was going to reverse here, and sometimes, we have to reiterate this to members because we have newer members. Older members understand, and when I say we're going to short from here and go back down to the bottom of the range, they understand how possible that is. But newer members, of course, will look at this and think that's insane to look at a short trade here and expect it to go all the way down here. But then after a few weeks or a few months, you see these moves playing out and see how the market really works. So here we gained a sniper entry here on the monthly time frame and knew that price would come back down here. Now, if I just take you back over to here first and just show you how ranges work. For example, I'm going to show you this on lower time frames. When price it sells off and makes a definitive low, for example, we had a sell off here, November 2022, kept pushing down. The definitive low was this bullish candle here. And then you need to wait for price to make a definitive high, which was when price sold off here. Let me just put this back to yellow. So then you extend that into the future and you wait for price to come to those levels. Here, price came back down to the bottom of the range, but didn't break it. It pushed back up, brought in buyers, but eventually came back down to liquidate those buyers, just as I mentioned over here. So brought in sellers here, went back up to liquidate them, and then sold off. Same thing applied here. Point 1, point 2, we had another drive. Now, what happens when that happens is where you can enter longs. And where are you looking for your target? You're looking to buy here, and your exit is up here. Now, of course, this takes extremely long to play out. And we don't look for monthly moves all the time. But we're explaining it now because this happened recently. And I'm showing you here. Obviously, when price was down here, there's using the same range tool, there's opportunities in here. But on the higher time frames, if you're keeping an eye on these, you can see these bigger opportunities come into play. So price is taking out the lower range. Most retail traders are shorting because they think support is broken and that price is going to roll over. But extend this into the future more. What happened? It took out the low and went up to the high. Then what happened when it pushed up to the high? So now, once the low is taken out, you want to expand your range. And now it's gone up to the high. What's it done here? It's pushed through, another fake out. So just as we saw a fake out down here to grab liquidity, what did price do? It went back up and done the same above. So we expand this to the downside and then we extend into the future. We expand this high to the upside because that's the new high, price sold off. So we expand in this range that started back here all the time, go up to the upside. Again, we're not always looking for this on a monthly, but we're always watching. Doesn't take long to put a range on a monthly time frame. Doesn't take long to do it on a weekly, daily, or 4-hour. The market consolidates a lot, and then it will make a false move before the real move to induce the retail sellers and use them as liquidity or buyers, whichever way of the market. Here, what has price done? It's pushed up, false move down, up, take out, bring in the retail buyers, and then bang, we come back down. If you're looking at taking a sell trade here at the top of a range, where's your target? The bottom of the range. So we now adjust this to the new high and expand into the future, expand this and extend into the future. What's happened now? We're taking out the low. So the same thing can happen again. We've come down, we're taking out the low of this range. Now we can expect price eventually to take out 97.91. And once that happens, we could be going back up. So this is a general view of the tool that we're telling you that you can use. So price comes back down, understanding liquidity has been taken, look for entries, and you get sniper entries. But obviously a lot harder when you're on the monthly time frame. To get a sniper entry, you need to drop down to the lower time frame, and we're going to show you how that works. So for example, we put the range back down to here, and we just think back to January to when we called this move from the top of the range. To simply see how simple it can be, just go back down to the bottom of the range and hold your trade. When price starts selling off strongly like this, gives you even more confidence to keep holding. Now, when price was at the top of that range, and as we explained, drop down to the daily time frame and go back. Please look at our post on our Instagram page where we gave out the US dollar short from here, where we saw price come up and come into these regions. We don't necessarily need to trade the Dixie, the dollar index. We want to take this, as explained in the video, and use that on the US dollar pairs. So here we understand that price is going to sell off, and we can look to buy the US dollar on the other pairs by buying EURUSD, buying GBPUSD, and buying Aussie dollar. Not buying the US dollar, but buying those pairs. So there are other reasons in here, but it all starts with the range, which is what we're teaching and showing you today. Here, for example, we had a high, low, high, broke the daily trend, came back. Now, when we're down here, we've broken the daily trend. This was lower low, lower high, lower low. Price comes back up, hits the lower high, hits the Fibonacci, 78.6, and we're off. But there's other things that I can't show you everything, but the range tool is a major tool and one of the first things we look for when we're analyzing the market. So then we started to sell off and started to push back down to the downside. There was even re-entries here, but I want to show you on the US dollar pairs in a minute. For example, price sold off here. This is a lower time frame from the monthly. We're down to the daily now. Price sells off, makes a definitive low, makes a definitive high. We extend into the future. Price takes out the low. We didn't actually buy this because our overall, we were looking for shorts already because we have the direction of the market. The monthly range high has been taken out. So price pushes back up. But when it took out the high of this range, we simply shorted here. From the top, sniper entry, back down. Where's your target if you're shorting here? The lower this range, which is being expanded to the downside here. But when price breaks through, you can simply keep holding, holding, and holding because it's following in the overall direction. And you can see the liquidity and the volatility to the downside because we've already taken out the monthly high. Now I'm going to show you how to gain sniper entries on other pairs on the lower time frames. But remember, the monthly high has been taken out. You don't always have to wait for a monthly, but if you look at a weekly range and you see a weekly range high has been taken out, then you can look for trade with it from there. Either from the weekly, you can get a sniper entry, which we'll show you, or drop down to lower time frames using this same tool, which we'll also show you now. So the dollar index has inverse correlation with EURUSD. It's basically, they do the opposite of each other. So what we're looking at in December, in January, was EURUSD was also in a range. Price pushed up here, definitive high. Price pushed down, definitive low. It had happened previously, but I'm going to keep this simple for the moment. Extend into the future. What we can see here is that price pushed down, false move back up, came down, hadn't liquidated the low, bearish candle, we liquidated the low. Now we're ready to move back up. Where most people, especially retail traders, seeing bearish, 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 they can only see one way. They can't see that this market could flip and go to the upside. But if we go back to the monthly, you can quite clearly see from what I've just shown you, price is pushing down, taking out the liquidity from the low. We said to buy EURUSD on our Instagram page here, and we also bought here and looked for that move back up to the monthly high. You can hold up to that monthly high or take profit when you're happy with profit in between. But a target, overall target that you hold a smaller percentage, you can wait for the monthly high. So what happens now? Price is taking out this low, so that monthly range expands. You still extend into the future, and look, it's come up to the monthly high. So now, just as we've seen prior, price has come up 0.1, 0.2. It's a strong candle. We'll be expecting that to be taken out. And when that is taken out, you can look for sniper entries. And where could you be looking to go? All the way back down. It can seem far-fetched right now, but it seemed far-fetched when we were looking at buying here and expecting price to make this move. And we gave this move, which is over 1,000 pips. Also 1,000 or so pips on GBPUSD and EURUSD. If I drop down to the weekly and daily time frame here, the exact level that we highlighted and gave on our Instagram page was here, this exact level. We said at the time, if the dollar index pushes up, because I'll go back to the dollar index on the daily time frame, when we gave you that trade or gave out that trade, we had an arrow showing that price would go here. Price was trading here when we gave the update. And we explained that price would push up on the dollar, which means that EURUSD, GBPUSD, and Aussie dollar need to sell off. And then the selling off on the dollar would begin, and the buying on EURUSD would begin. So there was the sell off on EURUSD, and that's where the buying begun. Now I'm going to show you how to look on the lower time frames for entries using the exact same thing. Now we've been looking at monthlies, so I'm just going to clear this off for the moment, but we understand that the monthly liquidity has been taken, or we've taken out the monthly low. So this area on the monthly has been taken out. So now we understand that we're looking for buy trades. Another opportunity, and that we took, is again, just keep looking at price. Price makes a run up, makes a definitive high. Price comes down, makes a definitive low. I'll zoom in here on the daily time frame. Price made a definitive high, price made a definitive low. Why is it definitive? Because price makes a high and moves away. Why is it definitive low? Because it made a low and moves away. Extend into the future. What has price done? It's come up and taken out that high. It then came up to retest that again. If price takes out a high, where is it going? To the low of the range. When price came down to the low of the range, what did we do with the prior range? We expand to the upside, to the new high, because the range will keep expanding and getting bigger and bigger. When price came down here, we coupled that up with the fact that we were already looking for longs. We already gave longs down here on our IG page because we understood that the dollar was going to sell off, and we understood that this was the bottom of the monthly range. So now we're looking for buy trades to go back up to the top of that range. By using the exact same tool on the lower time frames, we can look to take trades in that direction. And so here, what we had was a sniper entry. We took this with our members, was a sniper entry down here with a move to the upside like this, and then price pushing up. And we ran this all the way up to here, over to the 20-to-1 risk reward, I believe it was at that point as well. And you can see the obvious first target here is always going to be the top of that range. But once you see a clear break and you're in line with the higher time frames, you can keep holding. And then price will do that time and time again. Also, we highlighted this to members. Again, definitive high, definitive low. Why? Because the price pushed up and sold off. Price sold off and then pushed back up. Extend into the future. What price done? It played around here, but it was a similar story. Price pushed up, 1, 2, came back down to this low down here, and it came down to this low and then up for a move. There was more reasons on the lower time frame using the range tool that price came pushed down a little bit lower, but it's essentially doing the same thing again and again and again. And if you take this range tool and practice it, you'll see how repetitive the market is. Now we're up here on a weekly time frame, as mentioned. We've taken out the range highs. We've taken out the lows over here. We're now up at the highs. See how we're accumulating and manipulating around the lows before the move? Up here, similar story is happening here right now. And we can see price push back up overall and then go all the way back down to the range lows once again. So that is showing you the dollar index on the monthly, showing you EURUSD on the monthly and the weekly, and then showing you on the daily time frame when we drop down and you understand that price is going to go and push to the upside. Or even if you weren't looking at that, just using our range tool here just shows you again, price was bouncing around here, price pushed up, made a definitive high, made a low, wait for price to come to you. Price pushes down, you're looking to go back up and attack the other side, where most retail traders are shorting on that extremely bearish candle and extremely bearish candle here. Well, not as extreme, but you can see the continuing the push down. But that's where retail traders are taught to sell and they're taught to put their stop losses above a range. And then this is why they get triggered in, might go into a small bit of profit, but then price goes back to the other side. In this case, it continued because it was in line with the monthly. Monthly doesn't happen often because obviously it's a monthly time frame. So it takes a very long time to hit monthly highs and lows of a range, but you'll see the range tool play out more often on the weekly, even more often on the daily, and more often on the 4 hour and 1 hour time frame, because of course, price on the lower time frame is making ranges a lot more often. Now, let's go to GBPUSD to show you a recent trade we took, and using the range tool, how we looked to enter the market and also exit the market as well. So here on GBPUSD, I'll just show you back to where we gave you the dollar index short, and we explained you could buy GBPUSD, Aussie dollar, US dollar, and EURUSD. That was the low. So when the dollar index was pushed up and made this high, we said that GU would have to sell off. If you look at the date of the Instagram post, we said it would have to sell off, and then you could buy all the US dollar pairs as the dollar index pushes up, and you could sell the US dollar. On EURUSD, we showed you where that was. GBPUSD, it was here as well. Now, more recently, we took a trade here for 8% on GBPUSD. And again, just using the range tool tells us a lot here. You can see that there's this price action here. Again, go into something more recent so you can look at it yourselves and backtrack it. But weekly time frame, we can see an extremely messy area. But doji candles, if you see a doji candle on a weekly time frame, it creates a range on the daily time frame. If we see a doji candle on the monthly, it creates a range on the weekly, and so on as you drop down the time frames. So here we have a weekly doji candle and 3 or 4 consecutive ones. So we understand that the high and low of a range, of a doji, create a range. So here's the high, here's the low. We can extend into the future. But let me just highlight it on that doji candle and drop down to the daily time frame and show you how the market expands and keeps making the same move. So here we know that this is a high, definitive high. Why? Price made a high and then it moved away. Price made a low and moved away. So then once price does that, you take out your range tool from here to here. That's the high, that's the low. And then what do? Extend into the future. Obviously this hadn't happened yet, so we were looking here. Price pushes up, in this case, takes out the high, brings in buyers, bullish engulfing candle, rolls back over. In this case, price took out the high, and another way to use this, even if you don't enter particularly here, it will tell you where price is likely going to go. If you see that price takes out the range high and starts to sell off, where do we think it's going? To the low of the range. So in this case, we understood this with GBPUSD, and we were looking for opportunities. Because we knew that price was going to go down to the low of this range, we're looking for opportunities to short. Now in this range, again, a doji candle. A doji candle means what? A range on the lower time frame. So we highlight that doji candle and extend it. I'll drop down to the 4-hour time frame to make it clearer. There's that range. So price came down, made a low, made a high here. So here is the low right here, and then it made a high. So we extend into the future. What happened? So that was the low, that was the high. Price came back down to the low, came back up to the high, toying, playing, accumulating. Came back down to the low, then it broke up to the high. We know that price wants to go back down to the bottom of this range. So at this area here, and there's a few other reasons that we can't give everything away, unfortunately, because we do have our service to our members. Some other reasons we can also see here, Fibonacci, price comes back up, 78.6, or sorry, the 61.8, rejects that. We entered short at the top of this candle as it broke to the upside of that daily range down here, or that 4-hour range that we just had highlighted. Because of that doji candle, price broke up, tapped the 61.8. We had a sniper entry here. Where's our target? Remember the range, we extend it to the future. Our target is to the downside of that range. We can see here with the Fibonacci that we keep on here, price pulled back up to the 61 and came down and tapped the Fibonacci extensions. This, along with other reasons, is why we actually got out here. So we had a sniper entry and a sniper exit. But it wasn't really down to the fibs. That was an extra layer. But the reason we got out here, why do you think it was? Go to the 4-hour time frame. Again, here was that because of the daily doji, it created a 4-hour range. We were waiting for a false break. So price broke up to the upside, it hit the 61.8. We already knew that price wanted to go back down to the lower of the range because it took out the high. So we shorted here. And then we made that move that if you hadn't got the sniper entry here, you got that move as a better setup was confirmed. And we were looking for that move to the bottom of the range. Price found some support here, but as we showed you on the monthly, price will do that. Price will find some support, bring in some buyers off the level of support, but it will break through. And again, what's the most manipulative candle, as I just mentioned? Bullish and bearish engulfing candles. Now notice we shorted on a bullish engulfing here and got a sniper entry right here, and we exited right here with a bearish engulfing candle. But it's because we knew that price was breaking to the upside of this range. So we shorted it and expected to come to the downside of this 4-hour range, which was here. But at that point, we knew that price wanted to go lower to liquidate the overall daily range that we're looking at here. So our entry here was a swing trade entry. So we allowed it a little bit more room than we normally do. We have intraday entries that have 8 pip stop losses and 15, but this was a swing and we got a 1 to 8%. It hit 8.5, but we took profit at 8%. But why? Because we got price drove down, took out the range low. So this is, what do we need to do? We need to expand this to the upside. And then we need to expand this to the downside. So price took out the range low that begun here. Again, remember, find your first and second point where price makes a definitive high and a definitive low. Then price will expand that range and it will get bigger and bigger. So here we're seeing that this is the new high. Now this is the new low. So price has liquidated the low, as we can see here. So we got out and then we expand this. And where has price gone from here? Back up to the upside. And now we're at the top of a range. Again, now this is an area on GU that we could be watching for price to potentially roll back over to the downside. So on this, an 8% trade was caught by starting off with the ranges first. Now, the more you play with this, I'm looking at higher time frames, the more you play with this, the more you'll be amazed to see how simple it can work. We've got an 8% trade here. The prior trade I showed you on EURUSD was from here to here, about 20%. From here, the bottom of this daily range. I'll also drop down to the 4-hour time frame to show you this one a little bit clearer. Go back to the 4-hour time frame, shows you a bit clearer. You want to be watching it on the lower time frames as well. But high made here, low made here. Price came up, took out the high. Price came down, took out the low. Sniper entry here. Off we go. Don't look back. Price is going in line with the monthly, weekly, daily. But this is again to show you on the 4-hour time frame how it would look. So here, using this tool was an 18%, 20% trade from this low up to this region here. It was a lot of profit, so we banked a lot of profit at that point. GBPUSD, we've shown you daily and 4-hour where the trade idea comes from. And if you use the tool, how you can see, on the daily time frame initially, price took out the high, so price wanted to come back down to the low. So we use that information to wait for a 4-hour range, break the high, and then short it back down to the low. Then in this case, we took profit here, and price took out the new low here, and then went back up to the range high. But see how price just keeps expanding? We also had an oil trade that hit 13% using the same range tool for a sniper entry. And I'll even show you Australian dollar, US dollar. It's a good example of how the range expands. When you see price selling off or pushing up higher, for example here, this was on the daily time frame, price is selling off, and there's lots of, I'll actually show another US dollar example as well, but there's lots of examples as price comes down, it makes ranges, even one over here, for example, price come down low, goes up to make a high, and then you can see price goes back up, takes out the high for a second time, and then goes down to the low. Of course, this is going in line with the overall trend at the time. So price is still pushing down here as an example, but the example I'm showing you here is just to show you how the range can start off very small and it expands and expands by taking up the high, taking out the low. And what it's doing is it's accumulating. It's bringing in buyers and sellers in the market on both sides. It's trapping them, and then it'll make a false move in the wrong direction and then make the real move. For example, here, price is selling off. As we can see, price makes a definitive low and then pulls back up to make a definitive high. Get your range tool out. You've got the low here, and then you've got the high. Extend into the future and wait. What happens? That's the low, that's the high. What happens? Price takes out the low, brings in sellers because manipulative candle brings in sellers. No, you're looking to go back up. You buy and price goes back up to the higher of the range, just like that. So what happens when that happens here? You now to expand the range down. So price has gone up to the top of the range, that's your target. And then here, because we're in a downtrend, we're going to be looking at taking profit or potentially even shorting here. So then you extend this into the future. Price is now taking out the high. So as we just go back a step quickly, I'll just show you. So here we've taken liquidity and taken out the low. And so then price goes up and targets the high. That's been taken out. So we now, with this low, we expand this range to the low. And then what happens? Price has now come from targeting here back down to the low. It's taking out the low of this range once again. So this is now where price has taken out the low. You can see price came down, 1, 2, false move up, bearish engulfing candle down to scare buyers and induce retail sellers. Price goes back up. We have to expand this because this is a new high. So we expand this to the upside. So then when we're buying the bottom of the range here, where's your target? The top of the range. Extend this into the future. Look at that. Came back up to the top of the range. Bullish engulfing candle to bring in the buyers, thinking it's a breakout, slumps back down. But down here was the low. So now we have to expand this to the low. And then what happens? Price takes out the high. Where does it target? Back down to the low again. So we have to expand this to the upside. And we have to expand this down to the downside. And we extend into the future. Then you can see price came back up in this region here. And then it didn't sell off straight away. So as you know that price has taken out the range high, you can look for opportunities and use the range tool on the lower time frame to look for more opportunities, such as price has sold off and starts to pull up. But we know that price wants to come back down to the low of this range. So here we can see, even within here, price makes a high, price makes a low, expand into the future. Again, another bullish engulfing candle, takes out the high, comes back down to the low of the range, but hasn't liquidated the low of the range properly. 1, 2, brings in some buyers, and eventually comes down. So you can look to take out some profit here. Again, price then eventually has a false move up and slams down to where? Because remember, this was the top of the range. So it was going to aim to come to the bottom of this range, which is why you looked for this trade in here to enter to come back down to the low of the mini range, but also the low of the overall range. So this expanded to the upside here. And what happened? Price came down and took out the low of the range. Took out the low of the range again, big bearish engulfing candle, bring in all the sellers, scare any buyers. What happens? A bit of chop, and then it reverses. Accumulates in this region, reverses. So then if you're buying down here, where's your target? Your target is again to the top of the range up here. So now, yes, we have to expand this again. And price is now where? It's at the top of the range, accumulating. And again, even doing the same thing again, we've got a range in here, high, low. Price has been expanding in this region, made a high, and it is pushed up. And now we're expecting Aussie dollar to come down and take out the low of this range. But again, you could be pushing down a lot more. So hopefully that just shows you an insight into a very, very, very good tool. It can be very, very simple, and it can give you patience to learn to not trade while price is trading within the range, and wait for those highs and wait for those lows and wait for the full smooth and get those sniper entries and drop down to the lower time frames and look for using the range tools again to gain that sniper entry on the lower time frames. If you'd like more videos like this, showing those lower time frames and similar things like this, we haven't done a video like this for a long time. If you like videos like this, please let us know and we will do more. We'll also be doing more analysis videos to give you our insights on the market and give you our future predictions in the market on a weekly basis coming soon. We hope you have enjoyed today's video and has given you something to think about and look for. Go and back test it, see how often it works, and it can be another tool to add to your arsenal, so you have a bigger skill set. Or this can be used as a standalone strategy to either wait for where price is going to come to, look for trades in those entries, and gives you confidence to hold trades for a longer period as you go and wait for price to go and reach the other side of the range. That's where I have big swing trades. This is where they can come from and where the sniper entries can come from. We're giving you a lot of information on this tool. I don't want this video to be too long. As I said, if you would like more on these and more intricate and more lower time frames, we can do that. We'll see what the feedback is on this video, but we've got lots more in store. So we hope you enjoyed this video, guys, and we'll speak to you soon. Thank you.